I've had people over the last 6 to 9 months. I've had offers on the table. I've had people ask me, you and I have talked about this thing, and they've said, "Why are you still at TFA?"
In life insurance, what if you don't die?
People don't think about that.
They don't know about it. It's out of
Yeah.
ignorance. Ignorance is bliss. We know that, but once you know, you can't have that blissful activity anymore.
1, 2, 3, 4.
So you're saying, bro, you were when you were 30,
Yeah, it was like 5 years ago.
like 5 years ago.
No.
And if you want to come just a little bit
Oh
closer,
yeah, for sure. So I was saying, like, when I was at your same time in my career, about 5 years in, I didn't have any benefits that I paid. Like, I had never experienced. I heard stories, but I was really just selling plans. And recently, I've had almost, like, if I had to put a number on it, like 10 different claims, like death claims, living benefit claims, heavy stories. So as you get older in the industry, you're going to have a lot more, which is pretty wild to even, go
Bro,
through.
it's crazy. I haven't done many. This is only probably like the second or third one that I do, but it shakes you up a little differently. When a client calls you and they say, "Hey, I'm going through this," or
Yeah.
praise God, like I haven't had any death claims that I've had to place, but I'm sure you probably have
I
a
have.
couple stories being in the business for some time.
Had
and
3 last
obviously-
month.
Yeah.
3 in June.
Yeah.
Yeah.
Any stories that come off top that maybe you,
I mean, I could be here for the whole hour.
yeah, any recent
telling.
ones?
Absolutely. Normally you hear ones of, I had $3,000 in my checking account, and thank God we had a $250,000 life insurance policy. That wasn't the case in this scenario. In this scenario, my client, who I wrote up about 12, 13 years ago, and I remember vividly, he was making $250,000, $300,000 a year at that time, and he was being cheap. He was overweight. He had diabetes. He was out of shape, and I got him approved for $130 a month, I believe.
Yeah.
$250,000 of life insurance, and he complained about it, like the price. I go, dude, this is like literally the only company that's going to approve you. You know which company it is.
Right.
And he said, okay, run it. So thank God he took the policy. And after he got in better shape, I went and proposed other plans. I'm talking like 6, 7, 8 years later, because he was a really cool guy.
Yeah.
And he was a business owner, and he sold printers. And so when he came to me the second time around, he's making $1 million a year. He's doing really well for himself. And I'm like, dude, you need more insurance. It's like, man, how much? And then I'm giving him numbers like $200 and $300 a month. And he's, it's too expensive. So he gets cancer. Make a long story longer, he gets cancer. Within about 4 to 6 months, I believe, he passes away. But he got cancer. He's literally calling me 3 weeks before he passes away and saying, I'm going to beat this. I've been reading books. I've been reading Law of the Universe. I was like, man, you need to read the Bible because you got stage 4 cancer.
Yeah.
I think something like 96% of people that have stage 4 cancer, they're going to meet their maker. So I remember him vividly telling me I should have got that $2 million extra in life insurance. And now my family's, going to be in trouble. And not to share too much news, but $250,000 life insurance for his business and his business model. He's married. He's a great dad. Saw nothing but vacation pictures in the funeral. That's going to make a dent in probably the debt.
You know what?
Futuristic goals.
What's crazy too is I tell people, I always, whenever I'm quoting clients or giving quotes or stuff like that, I like to start at $1 million. Reason being is, living benefits are great, death benefits
Inflation.
are great, but inflation is one thing. But another thing is people don't realize that when you're in the hospital, that bill, it climbs quickly.
Like Omar.
And we recently we'll kind of talk about that a little bit later, but people don't realize how fast and how expensive healthcare is, which is one of the biggest things that, we'll talk about the four major economic concerns. But before we do so, guys, welcome to the Wealth Group Podcast. This is a podcast, and today's a special day on set because we got one of my mentors, one of my brothers, one of my really good business partners, one of the guys that's really taken me really under his wing. He didn't have to, but this is a guy that I look up to in the business and look up to in life and stuff like that. And we got no one other than the man, the myth, the legend, Mr. Manny Soto.
Thanks.
My guy. Bro, welcome to the Wealth Group Podcast.
Thanks.
Bro, yeah, so it's a little different the way that we kind of flow the podcast. This is episode 6, right? So episode 6, we just relaunched recently. And so what the feel is I want people to get a feeling of what the conversations are like behind the meeting Zooms in the room and then in the meeting rooms.
Okay.
Right? So it's like they just walked into a conversation. They walked into a meeting.
I love that. No, you started right on point. I like that.
Yeah.
That's dope.
Yeah, and so go ahead.
As much wind to my fire that you want to give me, when you first came in my office, I was like, twist my arm. I'd love to coach and train this guy. So you were coachable. You still are coachable. You have a great business mind, and you have incredible business acumen. So, twist my arm. Give me 3 of these. Give me 30. Give me 300 of these dudes right here.
Oh,
twist
man,
my
I
arm.
appreciate that.
Absolutely.
Appreciate that, man. Yeah, I mean, really you're listening to today's podcast, you're wondering, man, what could Manny and Pablo possibly be talking about? Well, first of all, we probably need like about 6 hours worth of content, but we'll spread it out over time. Today's episode is really going to be on the 4 major economic concerns. What's going on in the United States right now? We're talking about it. And we were just talking about one of the things right now. Inflation's huge, right? We're talking debt. We're talking Social Security. We're talking wealth transfer. We're talking taxes going up. Manny, I mean, this is something you're going across multiple real estate offices. You're going all over the place. People follow you on the gram. We're constantly talking about it in our training appointments, in our trainings. The 4 major economic concerns, right? Where do we get started? What's going on in the country right now? What's going on with our economics? What's the update?
Well, not to be Mr. Econ or anything, I took Econ 101 just like anybody else that went to college and dropped out of college. That was a part of your general ed when you get into the first 2 years of college. So I've always been nerding out over that kind of stuff, but when I originally started in financial planning, I remember going through 3 dangers, and it was all leading up to making a sale. So I originally started with these 3 different dangers, and I added it to my presentation because I went out in the field with 4 different field trainers, and I learned a lot in those field training appointments. But part of that was that I needed to be different and better. Hint, hint. So I know that you're on that cusp as well.
Yeah.
So I thought about that, and I added it to my presentation. So the one danger that I would talk about all the time was baby boomers. It was cliche, it was catchy, and people had heard of it before. From the year 1946 to 1964, a huge amount of babies were born. They termed them the baby boomers, make love, not war, and I'd go through the progression of where baby boomers were born at and what was real popular and where it was at that particular time in 2003. So now we're in 2025, 22 years later.
22 years.
And, it's the same 3, but I just added one more. The secondary one, so number 1 was baby boomers. Number 2 was Social Security. And even at that time in 2003, Social Security was a concern. I think at that time, I don't want to come up with any past projections, but I think it was like 4 to 1. For every 4 people that was working, they were putting 1 out to pasture, and you were living on you were living on Social Security. When FDR created the Social Security program, it was 10 to 1. So for every 10 employees paying into Social Security, you had 1 person that was retiring and collecting a Social Security check. And that was because life expectancy back then was in your early 60s. Now life expectancy for a female is 81. So that whole system is just cracked. It's broken. Because now I think it's two and a half. For every 2.5 employees, there's 1 person that's retiring, going off, living on Social Security. So that's a big danger. So we need Social Security reform. And depending on which article that you pick up, whether it's 2033 or 34, our social security system is going to be bankrupt, going through massive cash deficiencies by those years. And then the third, of course, is our U.S. debt. I'm sure that you share the U.S. debt clock.
Yeah.
.org. I'm
Yeah.
sure you share a lot of different things with your clients and potential clients. But number 3 was and still is our U.S. debt. Back when I was talking about it in 2000.
We got the live clock
Boom.
here.
Oh, love
I mean,
that.
if you take a look at it,
Come on.
I mean, the U.S. debt, that's something I really want to dive into, because that U.S. debt's out of
It's
control.
stupid.
I mean, that's real time. You're watching this. That's real time right now. So keep going, bro. I just
I
wanted to
can't
bring that up
stand when people get political about U.S. debt.
Yeah.
Whether you're Democrat or Republican, liberal or conservative, or whether you're a Mickey Mouse or a bystander coming in out of the country, it does not matter. Our nation is a debt nation. We live on debt. And the debt has not been balanced since Clinton.
Why do you think that is, bro? Why do you think that we've been trained so much to just rely on debt so much? When you go to other countries, from what I've heard, right? Other countries, you guys like you pay cash, right? Like I have a big Latino market, Latino family. You got tios and tias and stuff like that. I'm sure you have people that they say, hey, I'd rather just buy something, buy it cash, right? What's your thought on that?
I just put a down payment on a house in Dubai, a villa in Dubai. I don't even tell you about stuff like this,
Come
but
on, man. What's up? Can I go over?
we
Can
gotta
me and
keep the
Gabby
main
go
thing
over?
the main
What's
thing.
up?
So in Dubai, from what I remember on my deposit, it was 10% you put down, 10% you put in 3 months, another 20% you put in a year, and then another 10% right before you move in. So you have 50% equity built into your property day one once you move in. So they don't live. They're not friendly when it comes to debt. If you want to Google them, there's major supercars that are left behind in Dubai because people go broke, and the government doesn't like it. They kick them out. They're like, "You're in debt. You're out of here." So you could just imagine the class of people that are in Dubai as a result of that. No taxes, etc. Here in the United States, we're a debt nation, and it's my belief, it's just my opinion, but it's my belief that we're spoiled. Our American dollar is the gold standard throughout the world. We deal in the gold dollar, and that was, I don't want to get too deep into the information, but that was built because presidents wanted to be popular. And it's just like parenting. Leadership is like parenting. Government is like parenting.
Yeah.
You want to be the favorite? Give your kids everything. You become the favorite. But do you create great kids as a result of being the favorite and giving them everything? No. My dad made me pop open the yellow pages and research, just like I make my sons go to YouTube and research. My daughter, I make her do all that stuff.
Yeah.
And the reason why is because my least favorite thing is to be favorite. Yeah. I don't want to be favorite. Don't get me wrong. I love my kids and I want the best for them. But the best for them is not going to be giving them stuff. And I do believe the United States, as a whole, the government, they want to get reelected. So they want to be the favorite. You want to get reelected, you want to be the favorite, give people stuff. Create a community program. Create a program where, and there's always exceptions to the rules, so I don't want the audience thinking I'm just like this autocratic leader, but I don't think that government officials are really governed by what's best anymore. I think that they're governed by what's popular now. Let me make me popular, so let me create a program that makes me popular. So government has really just gone to the dumps. And as a country, I'm sure you know this, but 1/3 of the spending in the world, we have what, 342 million people in the United States? We don't have 1/3 the population of the world. Look at India, look at China. But we have 1/3 of the world's spending is done by the United States.
That's crazy.
That's unbelievable. So we're the poster child for them selling us stuff. So when China goes to work and their employee makes $1.20 an hour, they're really working to provide goods to the United States. And that makes us spoiled. So that's why you got other things that are going on right now, like BRICS, different currency specifics, Cryptocurrency is really important right now. It's a race for crypto.
Yeah, we'll dive into that a little bit later.
AI
yeah.
is stupid. Like,
Yeah.
I can go on and on, but I think that America's just spoiled. That's the bottom line.
One of the
that's 3.
Yeah.
And then number 4 is healthcare.
Healthcare.
Yeah.
Healthcare, which we were just talking about, right? I just had a client recently. I was telling you right before the podcast started. I had a client that called me literally right before we came on here. Little 5-year-old, right? God protect him, but just the parents just called me and he just got diagnosed with leukemia. And we were just talking about, I mean, we just had a close friend that got in a car accident. I mean, thank God he's okay. Omar, shout out to you. You're probably listening to this, man.
My brother.
But yeah, that's our bro right there. And
God.
massive asset to the company. Massive. I mean, about to be a father. He's a husband. These things happen, right? And healthcare, been in the hospital for quite some time. I mean, now, this client that I have is dealing with hospital bills. And
well, let me tell you,
Yeah.
let me tell you the full story about Omar, because I think it's worth its weight in gold.
Yeah. I didn't want to
Omar-
talk about it, of course, without just being, out of due respect for him. But if we're cool, yeah.
Omar is about it.
Yeah.
Omar is a pillar of our company. He's our chief operating officer. He got into a head-on collision 3 weeks ago, and lady was traveling opposite direction, lost control of her car, went right into his lane, head-on collision. Bam, she's dead at age 30. She had 3 kids, no life insurance.
Oh, man.
GoFundMe, the whole 9 yards. And Omar is sitting on the side of the road with a broken foot, ankle. He had his hip busted up. He has 76 staples on the side of his hip. I mean, the doctors have said he's probably not going to walk for about 5 or 6 months. So all of that stuff, thank God he's alive and he's very upbeat. He's in good spirits.
Super positive, yeah.
And he's very positive about it. I went to go see him a couple different times, and dude lights up the room when he smiles. So love to see that. But the reason why I tell you that story is because in life insurance, what if you don't die?
People don't think about that.
They don't know about it. It's out of
Yeah.
ignorance. Ignorance is bliss. We know that. But once you know, you can't have that blissful activity anymore.
Right.
So imagine having a critical injury. You didn't die. You didn't have a critical illness, which we have. Life insurance has critical illness riders onto it, where if you go down with a heart attack, stroke, cancer, ALS, blindness, amputation, Alzheimer's, the whole 9, that's a critical illness. But a critical injury is if you become a paraplegic because you're involved in a head-on collision.
Right.
Or you can't walk for more than 3 months. That's a critical injury. So Omar happened to have that type of policy, and he's put in a claim already, and more than likely he's going to get the claim paid through this specific action. Now, what if his bills, because we all know that car insurance, they're not going to cover you for $400,000 bodily injury. Thank God California implemented mandatory auto insurance, but I think the max is like $60,000. So what happens if he gets a $400,000 bill? How can he afford that? Are they going to put a lien on his house? Is he going to have to file bankruptcy? So it doesn't just hurt you physically, it hurts you financially. And I can't stress enough. That's why I wanted to tell the story with some oomph in it and let everybody know that's not, don't take that like a Sunday afternoon. Like, that's very important. Secure your family. I think it costs what it costed you last night to go out to sushi with the family.
Yeah, and what people need to understand too, I mean, we have conversations all the time with clients that they say, hey, yeah, I got life insurance through my work, I'm good. Or I got life insurance through my cousin at Prime America, I'm good. What people need to realize is that just because you have a life insurance policy with living benefits doesn't mean that you're completely covered, right? In this case, thank God he had a life insurance policy with one of the carriers that we offer that just happens to have that critical injury component, right? So maybe you're somebody that's listening to this and you're like, no, Pablo, Manny, I'm good. I have life insurance through my job, or I got life insurance through my cousin at Prime America. That's great. Congratulations. You have life insurance, but do you have the full benefits, right? And a lot of times, even when it comes to pricing, that's a whole different story. But again, you want to make sure that you're getting your policies reviewed. You want to make sure, because again, in the case of Omar, in the case of my client, now because of the critical injury or illness, now they're covered. Because those, again, 4 major concerns, one of those being the rising cost of healthcare.
Right.
Healthcare is getting more expensive.
And for those of you that are terminators out there, you just sell term insurance. He has a term insurance, but that's a term policy. So contrary to what popular belief may be, that's a term policy, and it has a rider on there. And I don't want to throw any shade on any insurance companies because, you all help society, and I think that's terrific. It's just that some companies don't have the products and services that others do.
I want to talk about that because when you I mean, you've been in the business for a while, right? Which is amazing. And this is one of the main reasons why I loved TFA. When I came to TFA and I saw the platform that you created and you continue to build, it's been amazing. But we have several companies, right? You've been able to cultivate this relationship with several companies. And so the question that I have for you, I mean, we have services across the board from rollovers to, living trusts to all types of life insurance, term included. What was your, I guess, let's go back to when you started TFA 2015? What year?
2013 is when I incorporated the
brand.
The brand, and then 2015 I filed the DBA. So we've been building for 10 years. We franchised it 3.5 years ago, though.
That's roughly around the time that I came on. So tell us about, you offering all these services, right? Why should somebody consider at least taking a look at the TFA model, whether it be from a client perspective or even from an agent perspective, compared to other companies? I don't know if you want to talk a little bit about the history and where you kind of came from to now.
I don't mind, just as long as everyone knows this is not throwing shade in your backyard, because naturally people want to throw darts. They're like, oh, they do permanent insurance, that's why they're horrible, or oh, they do term insurance, that's why they're horrible. Oh, they do living trusts, and that's why they're horrible. They're always trying to throw darts. As long as I get into the business or anybody else gets into the business, knowing that you're going to have haters, you're going to have congratulators, that is par for the course. You either lead, follow, or just get out of the way.
Yeah.
So knowing that we have competition in the insurance and in the investment world, that is, again, par for the course. Everybody knows that. But now you have to go in with a clear mind and go, okay, emotions are high, intelligence is low. So if I get too emotional, I can't be smart. Emotions are low, intelligence is high. So I need to have a stable attitude when it comes to dissecting a specific company. Here's some of the things that you look at. Do I keep my book of business? Do I own my book of business? That's very, very important.
That was a kicker.
Does the comp plan have gas? Am I going to go broke just trying to build somebody else's agency? Do you have the right products and services? Is it going to be something that a new product comes out and you just aren't going to have it? And then, of course, lastly, do I have the leadership that's going to let me really spread my wings? Or is this something where it's the Manny Soto show? And it's not, obviously, because Pablo's one of the financial architects, and he's just amazing at it. So, and we all have an individuality. So if we went through each one of them, I'd be here all day. But to take the makeup off the pig, we have every company out there. What do you want? You want life insurance? You want life insurance with living benefits? You want life insurance that you don't have to die to use? You want life insurance that you can use as infinite banking? You want life insurance that you can retire income tax free? You want life insurance that's not life insurance? Do you want a supplemental college plan for your kid? Do you want a disability plan? God forbid you're a dentist and you lose the ability to use your money makers, your hands.
Yeah.
Do you want an illness plan? What if you go down with stroke, heart attack, cancer? 39% of Americans will have cancer in their lifetime. Why would I get a life insurance policy that I have to die to use? Hello, somebody. Who's out there? So if I get involved in I'm really going to cause some enemies here. But if I want to get involved
unfiltered, man, you roll.
If I want to get involved in a network marketing company, it's a good and bad thing. Good thing because I could build a squad and I could leverage other leaders and I can do reverse tap routing. Bad though, because once I build my 200-person squad or 700-person squad, and now I've leaned my ladder up against a company building. If a new product comes around and the company knows that this army is not going to be able to market it, they're going to tell you bad product. It's not a bad product. It's a bad company that didn't put the product in the menu. So when I started the company, I was upset. Obviously, I was at World Financial Group. They had limited product mix. They had a cap on my commission. I couldn't own my book of business. I mean, the brand goes on and on. I'm past the 2-year mark, so I can share that
talk about
information.
those things,
So,
yeah.
when I started the company, I didn't want a big ass agency that we have right now. I didn't want this. It's just too much drama. So I just wanted to do like regular financial planning.
So why'd you start building?
Omar, 10 years ago, Omar got involved. We're making phone calls out of my living room, and then I'm like, I gotta create an environment for him. And then Erica came, and then other people came, and then became bigger. And then, over time, people like search you out. And then I had guys from World Financial Group that I had known for years that were like, dude, I want to go put my license with you. So they came over with me, like 3, 4, 5, 7, 8 still coming over from other companies.
One of the things that kind of caught my attention was when I got licensed, I was sold the dream on being a life insurance agent because it's a life insurance license, right? Which is great. But what I realized, and something that I don't think I've ever told you this, is the biggest thing that I saw in one of those first meetings, what was it, 3-4 years ago when I went to that meeting? Yeah, whatever it was I realized that there's a major difference between just being a life insurance agent and being a financial strategist.
Sure.
I loved what I loved about TFA. When I was coming to the meetings was I was getting fed knowledge and wisdom, wealthy wisdom on how to speak to my clients. For example, one of those topics being the 4 major economic concerns.
Yeah.
One of the biggest topics, right, which I have a video. I'd love to get your feedback on. Which is two things. Number one is the wealth transfer. There's a big wealth transfer going on. One of the tools to be able to help with that wealth transfer, whether it be a living trust, whether it be a life insurance plan, whether it be rolling over some annuity business, right? All of these things were it was more ammunition. And I wasn't getting this at other companies because, bro, I come from 3 other companies prior to coming to TFA.
Right.
And it's very common. Right, I see it in the real estate industry. I see it in the insurance industry. I see it in sales across the board.
I want to touch upon that too.
Yeah,
don't let me forget about that.
Yeah, you usually go about 3 or 4 different brokerages before you finally find your home. So for the new agents that's jumping around and they feel bad about saying, "Well, I have to stay loyal here." Yeah, that's awesome. Stay loyal there if it's servicing your vision. If it's not servicing your vision, you're not getting what you want. You don't feel that peace. Maybe start looking somewhere else. Hit Manny, hit me, hit somebody on the team. We don't care. The thing is there's a big difference between going life insurance and really being a financial strategist. So I know you wanted to touch on a couple things. Go ahead. What was that?
Don't let me forget that. But you asked a great question that I want to finish for you, which is, what makes us different than other companies?
Yeah.
So if on the multi-level side, they're just recruiting agents, that's their number one product is recruit. That way they can get in their market and sell their aunts and uncles and their own policies, and then they're gone after about 2 to 3 weeks. That's the strategy in network marketing, which is fine. Network marketing has created more millionaires than any other type of strategy business consulting companies.
We got a network marketing GOAT coming next week on the show.
You
know who he is. We'll talk about him after.
Wait to meet him. So you could go that route, or you can go the independent route. The independent route is like, you're a nerd. You're normally a fiduciary. You're picking up AUM. You're doing stocks, bonds, mutual funds, ETFs. You're doing all this good stuff, okay? In a mix, you're doing annuities and things of that, exit strategies, etc. These guys have small teams. Normally, it's like 3, 4 advisors. These guys have massive teams. It's recruit until the cows come home. TFA is more like both.
Hybrid.
Absolutely. So I'm going to be in Minnesota next week with 6 of our advisors, and they do dinner seminars. If they'd like that type of strategy, then we put them on dinner seminars. I own an investment firm. I own an RIA. So those of you that are listening that, they're just insurance peddlers. No, respectfully, we do RIA stuff. I hired IARs.
Break that down. What does that mean in simple terms to the person that's probably listening?
RIA stands for Registered Investment Advisory. So by definition, that's a fiduciary. Okay? Oh, you're a fiduciary. IARs are working with the RIA. So they're representatives. So you're a franchisee of the financial architects. So your reps are below you and you override them and you coach and train them. So you would be the RIA in that scenario, and they the IRA or IAR. So we do AUM. We do financial planning specifically, and we have a great institution that does it. I own 76% of that company. Danita owns the 24% of the company. So we got play in both areas. But the reason I wanted to express that is because majority of the time, man, when I was at WFG, 98, 99% of my recruits, they'd quit. I mean, it was in through the front door, out through the back door.
Yeah, turnover was crazy.
Attrition was stupid. Here at TFA, our attrition is very limited, and I think the reason why is because our comp model is very bottom heavy, whereas in a network marketing company, it's very top heavy.
Right.
So if I have a bottom heavy comp model, now my agents and advisors, they actually can make some money, but it gets better because you are on a big contract, but you can get the MGA contracts that other people want, but you can get them by you doing minimal production because us at TFA, we have massive production. So you don't need to go anywhere. I mean, legit, I have a hater that left our company and she left for 5% less because she literally did not want me getting the override. So when that happens, why would you leave? Dude. Oh, it's because, I didn't like that you were publicizing my production numbers. Okay, well, produce more. Why is that such a big deal? So every single scenario, you have different waves in the ship. You know what I'm saying?
Right.
So with us, you're not really training your competition. You're training your business partners. And the reason why I wanted to go there was with respect to real estate. I know one guy that's created tons of competition. Like imagine having a, for lack of a better word, Century 21, and you build an agency of 100 realtors. For one of them, Mr. E.F. Hutton, one of them that's well respected within the office, they go out, they leave and start Century 22, 2 miles away. And they take 30% of your agents. That happens all the time in real estate and lending, all the time. There's no spread in it. So when they leave, they started their competition, and the competition is probably better than them.
Yeah.
They have better systems, they're younger, whatever the case may be. In our brand, in our deal, that doesn't happen. We're training our business partners.
Yeah.
So when we have a guy that branches out, like you have a guy that branches out like Pablo, and he has his own stuff, own factory, I'm like, dog, anything I can do to help you?
Yeah.
Go get him, bro.
And this is something I wanted to talk about because it's been, we're going to just this is where it's going to get a little serious, right?
Mm-hmm.
I've had people over the last 6 to 9 months, I've had offers on the table. I've had people ask me, you and I have talked about this thing, and they've said, why are you still at TFA? And I said, there's no reason for me to leave.
Yeah.
I have the best platform. I've been around the block. I've interviewed. I've gotten offers. I've gotten offers for more. There's no reason for me to leave TFA, right? Yes, there may have been some separation within. It's no secret. I was away for a little bit. That doesn't mean I'm leaving the company.
Yeah.
I'm still very much integrated in. I'm talking to Manny multiple times a week. You may not see me at the meetings, but I'm still here.
Yeah.
I'm still rocking. When it comes to the platform at the company, the competition, there's always going to be, but I believe the number one reason why people leave is leadership. They're not getting what they need. It's not money.
Not getting fed.
Yeah, they're not getting fed the wisdom. They're not getting fed the know-how, right? And one of the biggest things that changed the trajectory of my business is when I started learning about several things that you talk about. One of them is the wealth transfer. I want to pull up a video. I want to get your reaction. One of the segments that we have on the podcast, we do reaction videos.
Okay.
So I want to get a reaction video here. But again, when it comes to the topic of wealth transfer, right? Wealth transfer is huge. It's really, really big. I want to get your reaction on this.
We might see our first trillionaires by 2034. Let me explain. According to Oxfam, an NGO that combats global poverty, the world is projected to have at least 5 trillionaires within the next 10 years, based on economic trends, investment patterns, and wealth accumulation data. Their report, titled Takers Not Makers, analyzes data from Forbes' real-time billionaire list as of November 2024, adjusted for inflation. Oxfam reports that 60% of billionaire wealth comes from monopolies and inheritance. Specifically, they state that 36% is inherited, 18% comes from monopoly power, and 6% is derived from crony connections. In 2024 alone, the world gained 204 new billionaires compared to the previous year. Currently, there are 2,769 billionaires worldwide, an increase from 2,565 in the previous year, reflecting a steady rise in billionaire numbers. Collective billionaire wealth grew from $13 trillion to $15 trillion within the same period. Oxfam also highlights that the world's 10 richest men saw their wealth increase by nearly $100 million per day. The report estimates that 36% of billionaire wealth stems from inheritance. According to Forbes, every billionaire under the age of 30 has inherited their fortune. Forbes data also reveals that billionaire wealth skyrocketed in 2021 during the COVID-19 pandemic. Additionally, UBS projects that more than 1,000 billionaires may pass down a total of $5.2 trillion to their heirs within the next 2 to 3 decades, potentially exacerbating economic inequality and further concentrating wealth within a small group of individuals. Oxfam's report underscores that billionaire wealth grew 3 times faster in 2024 than in 2023. This report sheds light on the growing concerns and complexities surrounding extreme wealth concentration. What do you think about it? Let us know in the comments.
Wealth transfer. What this guy's talking about is the billions of, not trillions of dollars, billions and trillions of dollars that's being passed down from one generation down to the next. This is probably one of the biggest reasons why I always like to say we're not just life insurance agents or financial strategists. We talk about that wealth transfer. We talk about opportunity in the industry and how this is potentially going to be one of the biggest paying industries over the next 10 years. I'd like to get your feedback on the wealth transfer. What are conversations that you're having with obviously with us as agents and team members, as business partners, but also with potential clients that you have right now that are inheriting so much money?
I'll fold a bunch of things in one answer. On a leadership side, those of you that are leaders, if you don't meet with your sales teams at least once a week, and you're getting lazy, or you're saying, oh man, I lost like 13 people in the last meeting, you're not offering any value. That's the reason why people aren't showing up. You can pay your employees to show up because they're salaried employees. You're not an earned leader. You've paid your attendees. So from a leadership standpoint, I have to always have value in my meetings. You have incredible value in your meetings, bro, because you're well read. You're constantly sharpening your axe, and I think that's friggin' awesome. The reason I say that, 2 days ago at our Tuesday night meeting, I ran a different article, and the wealth transfer is no longer over 80 trillion anymore. I was blown away. The wealth transfer over the next close to 28 years is more like $124 trillion. So as a leader, I go, this is a great message for my squad, because what do? We're in wealth planning. We're in wealth transfer. We're in strategizing for wealth, legacy, etc. Life insurance, annuities, living trusts, pour over wills, all that stuff, medical directors, all that stuff has to do with us. Right. So when you take $124 trillion and you don't want a piece, if you want to be in, respectfully, if you want to do oil changes instead of do financial planning, you're going to get oil change money. If you want to be in cement, you want to get be the best in cement, well, you know what to expect. I'm talking about $124 trillion behemoth giant that is here. It's not like coming next 7 years from now. It's here. We're literally in the thick of it. So if I get the right person that's 25 years old, 28 years old, 37 years old, that wants to get in wealth planning with us, and with knowing that it's $124 trillion of rollover wealth that's going to be encapsulated, twist my arm, where do I get started? And if, let's say, for example, I go to Pablo, who's one of the best at it, and he's young, he's hungry, and he's ready to go. I go to Pablo, I go, hey man, are there 17 things, 21 things that I need to learn to get a piece of this pie? What are my sales strategies? Pablo sit there, he'll probably ask you to pay him because his time is valuable, but Pablo sit there and show you the 21 things that you're going to need to learn and take you in the field on 10, 15 training appointments. And it's go time. It's rock and roll. And then after that, it's just marketing. So what do I think about it? I think it's absolutely true. There's numbers don't lie, people do. And if I tell my guys all the time, you're one client away from being financially independent. You get a billionaire that wants you to be their person, their financial planner, the guy that's on their hip. You're financially independent, whatever that amount is. And you're one person away from an explosion inside of your business, because man, when you get somebody like a Pablo in business with you, better be ready. You can't attract a person like Pablo or George or Jennifer or Neil or Joe or Jose or all the other guys that we have on our squad. You cannot attract that identity of person if you're not ready for the noise. So you got to have your act together as well. So be well read, have your act together, have big goals, and then you're going to end up attracting all these great people. But knowing that the wealth transfer is $124 trillion blows my mind. I'm like, okay, let's get to work. Time to get to work, Yeah. So, yeah.
I mean, people need to be prepared for that, right? And the reason why I got into the business was I lived it. I mean, you know my story.
Mm-hmm.
We talked about it all the time. I was part of the wealth transfer in a, I lost my dad at a young age, and unfortunately, I have a big Latino base, and
Yep.
Unfortunately, our people, and we're not necessarily, work ethic isn't the problem. It's just we're just not educated,
Yep.
right? And that's really another thing that attracted me to TFA was the mission statement, right? Is we're here to educate and empower families financially,
Yep.
right? And so when it came to education, I mean, you live by, and bro, I got to give kudos to you again, because you talk about the clarity of the vision, right? You set the vision, and now as business partners, we come alongside to amplify that vision.
100%.
So I think it's huge, and not to mention, I mean, I just pulled a stat, right? Average person that does what we do, and again, this is just according to ChatGPT. I love chat, right? According to ChatGPT, average person that does financial planning right now, ages 51 to 56, right? Now, I'm in this business for hopefully a long time, God willing, right? Yeah. Hopefully a long time, but the beautiful part about what we do, and I want to speak real quick to the millennials real quick. Being a millennial, being somebody like yourself, you don't think that we're probably going to create so many different relationships over the next 20, 30, 40 years? You got to imagine 30 years from now, right? I'm in my mid-60s, right? Early 60s. We're still, I mean, the book of business and the opportunity to help people, financial people will, as long as the world is still going, people got to make money, and they got to understand how to steward their finances, right? And so we have a big Bible believing community, right? And even you want to tie scripture into that, right? There's so many verses in the Bible about money. Right, one of the most popular ones being Proverbs 13:11. Proverbs 13:22. Good people leave an inheritance for their grandchildren, but a sinner's wealth passes on to the godly. Right. What is that saying? What is Solomon talking about? Solomon's talking about leaving an inheritance. Right. Good stewardship is leaving an inheritance. We're going through a wealth transfer. Right. Your job as an individual is to set up legacies to come. Wealth transfer. We're talking about financial stewardship. We're talking about if you're someone that is maybe a millennial, you have an opportunity. Maybe you don't have the wealth for yourself. Maybe you're in that stage of planning wealth for yourself. You're building a business. You're getting your first piece of real estate. Whatever the case may be, you have opportunity to also talk to your parents. And this is from a millennial speaking to a millennial person right now. Have this conversation with your parents. Your parents are 50, 60, 70 years old, whatever it may be. Have the conversation of something as simple as, hey, maybe we got to sit down with Manny and Pablo and talk about a living trust. Or maybe, hey, you have that old IRA there, that old 401k. Hey, what happens if the market goes down? Are you ready for 2008 to happen again? What happens? What are the opportunities out there, right? And this is what wealth transfer is all about, is proper financial stewardship. So again, man, this is I mean, we could keep going on this for hours, but as we transition into the next topic, that I have one more topic I want to talk about. Talk a little bit about what are conversations, because I want to dive back to conversations that you're having with people that are making over $250,000, setting themselves up. What's a conversation like with those people in terms of what the wealth transfer?
It matters on who walks in and who shoots you a DM. I get a lot of leads from Instagram. You know, I post here and there on my Instagram story, and I had a lady the other day. Her and her husband, they have 2 kids. They just bought their first house in Bakersfield, and I got them a couple term insurance policies, and set them on their way. That's what she was looking for, is just life insurance. Now, obviously, I inbounded it. My staff took over, and they did the quotes and they did the application. But I have people like that. I have people that walk in from Yelp. We have a pretty big Yelp presence. We have 5 stars on Yelp right now with over 100 different reviews. So we'll get a walk-in from Yelp. We had a lady walk in from Yelp where, unfortunately, her husband passed away in his sleep in his early 50s. He was fairly young, but he had $1.3 million in his 401k, and she needed to roll that over into her own IRA. And then she needed life insurance as well. So we had another family that needed a living trust. They had their primary home and their rental property, and they wanted to pass on wealth to their kids. And
so regardless of the age range that they're in, I mean, having something as simple as some type of life insurance in place,
totally different.
Having a living trust in place, right? And then opportunity for rollovers, whether that be inherited money, whether that be IRA for old 401k money. I mean, this is
there's so many different strategies.
Right.
I could sit here for hours and talk about different strategies. Like, if you want to protect your wealth, there's different strategies. If you want to protect your income, there's different strategies. If you want to protect your real estate, there's different strategies. If you want to protect your business, I got a guy I got off the phone with yesterday. He owns a very successful roofing company. He gets personal coaching from PBD. Yeah. So he needs a profit sharing plan. He needs a golden handcuff executive plan. He has 3 executives that need to be protected. These are just, there's high volume, huge talk of multi-million-dollar guys. This guy's probably worth $100 million. Got conversations like that, and then you got conversations with mom and pop. They got $300 in their checking account, but they want to make sure that their kids are taken care of, which I got to get behind that, bro. Like, I'm getting goosebumps talking about it, because that was my mom. Yeah. I didn't come from money. And there's a part of me that says, man, I got to be in the right rooms. I got to help the right people. My minimum commission needs to be $20,000. But even then, I can't get rid of, I got my hand in the foxhole, dude. Like, I'm okay making $500 on a term insurance policy because I was that person too. My mom was that person too. Yeah. Who am I to judge them not to get them the right help that they need? So that's what I love about the company, is that we can go high end, or we can go middle, or we can go, I don't believe in anybody being low end. You can go high, you go middle. But no matter what, everybody deserves an opportunity to be somewhere better when it comes to their financials. Yeah, and it's having that. You say it all the time. Having the opportunity is the opportunity. Big time. Right? I love that quote. We're gonna quote that one, make a reel out of it for me. Big time. But again, another thing, retirement planning, retirement strategies, right? 4 signs you're not taking retirement seriously. I have a video here. I'd like to get your reaction on this. For sure. Because this is a common one.
5 signs you're not taking retirement seriously. Number 1, you have no goals. Retirement is not an age. You don't just get to retire at 60 because the government said so. It's a financial number, and you need to know that number. Now, obviously, we have no magic 8 ball to go, well, you're going to have $4.8 million if you just do this. We don't know what the market's going to do. But we do know, if you consistently invest over time, we know what the average track record has been of the stock market with mutual funds, that you'll have a good nest egg.
Next,
what's the next sign?
When you know that you're not serious about retirement is that you're not saving 15% of your income.
We just saw that in the stats.
Yeah, the average salary for Americans in their 40s is around $59,000. And if you started investing 15% at age 40 and did that every year until you retired, you would be a millionaire by 65.
Next sign you're not taking retirement seriously, you still have consumer debt. You're still hanging on to that student loan, the credit card balance that you were working to pay off. Well, we did the HELOC too for that pool because we needed the pool for the kids. And here's the thing, debt is actually just borrowing from your future, which is not a good plan if you want to retire in the future. So use the debt snowball method. It's the one you hear about on this show, smallest to largest balance, regardless of interest rate, and focus on paying off all consumer debt other than your mortgage. And what that does is free up debt payments that you can now use
There you go.
to invest that $700 truck payment.
Next is that you overspend on non-essential costs of living. Cost of living is the top reason people don't save for retirement. The average American spends $1,500 on non-essential items every month. It's almost $18,000 a year on things like eating out, impulse purchases, and subscriptions. So cut your cost of living.
All right, last sign you're not taking retirement seriously. You knew we were going to say it. You're not doing a budget. Having a monthly budget is the foundation of winning with money. Budgets are not for broke people. They're not for when you have money. It's for people who want to have money and want to keep that money. You got to know where every dollar's going.
It's like a mirror in front of your face. I mean, like, this is what I'm doing. And you're actually seeing it. And if you're not budgeting, so much money just slips away. And you don't even realize it. You really don't realize it.
I'm curious to get your reaction on this video.
Oh man,
Regardless of the host, I'm curious to get.
multifold. I don't know either one of them actually. I've never seen them, but multifold. If you notice, they come up with stats of 59,000. I don't know where that has to not be California. LA County, the average median household income is still $85,000.
California, yeah.
In California, but I agree with them when it comes to budget for regular people that have jobs. Absolutely. For entrepreneurs that are bigger thinkers, they're bigger thinkers. They're fly by the seat of their pants. I'm a weird financial planner where I'm kind of both. Yeah, I save a lot of money, but I'm not really budgeted because every month we make different amounts of money.
Right. Do you have, speaking on budgets, do you have something that, let's just say Bob and Mary Smith, they make $120,000 a year. They have a $500,000 loan. What is, and they're making, I don't know, they have a $500,000 term policy, whatever the case may be. What are your, I guess, formulas typically around percentages of what they should be putting away for savings?
I used to do that budget talk.
Right.
I mean, I don't do it anymore. I think I don't even feel bad saying that. Actually, I don't feel bad saying that because it's a waste of my time. Okay. They're wasting my time. Okay. So husband and wife, they get together, they start holding hands. I start talking about the honeymoon that they did years ago, and they get all hyped up over, oh my gosh, Manny, you found $1,700 a month for us. Yeah, we're ready to save $1,700 a month. They start saving, and 2 months later, they don't do the plan. So now I have to go back. I have to redo the plan because they can't get in budget. So instead, they're like my boss now. Instead, I put the chip on their plate. And I say, hey, here's what we got. If there were to be a cookie jar in your kitchen and you could sock away an amount that you're serious about to get you to retirement, how much would that be? It'll be $1,700 a month. I go, okay, $1,700 a month. You can retire by the time you're 67. Bob, you can retire by the time you're 70. Okay, cool. Let's do it.
Now, one of the things you talk about, and you've trained us on this, we talk about this all the time, helping people find their financial independence number.
Yeah.
Right? There's 3 questions that we talk about with clients. Go ahead.
So the 3 questions are, at what age do you want to not have the opportunity to work anymore? Because lots of people, they like to work, so I ask it in that fashion. Number 2 is how much money every single month will you need to retire on or have the comfort in retiring on? And number 3, would you like that income taxable or non-taxable? Majority of the time they say non-taxable. Okay, terrific. So if I could show you that plan and it makes sense for you and it's comfortable for you and your spouse and your family, that would of course be something that you want to take a look at, right? They say, right, terrific. So using $1,700 as the example. So if I could create that plan with $1,700 a month, you'd have no challenge in writing me a $1,700 check the next visit within the next 3 days. And they say, yeah, absolutely not. Terrific. Okay, can we get this done today? They'll throw out different things like that. And I'm giving the synopsis, of course, but even in that scenario, I tell them, why don't we start with 1,000? It does 2 things. It alleviates a lot of their stress, especially from what I've experienced. Ladies, don't get crazy. It alleviates a lot of stress on the man. Yeah. And I'm a man. I understand how stressful it could be, being the commander-in-chief of your household. So it alleviates that stress. And the husband and wife look at you like, all right, Manny's not completely out for commission here, because I'm not. I want a solid client. I don't want a client that I'm gonna have to go back to 2 months from now, redo their whole plan. So again, I put the chip on their plate, and I let them have the opportunity to make the opportunity. But I want them to know that I'm not there to waste my time.
Yeah.
So I hope that answered your question. But on the video, those two things, again, they should have a budget for a regular family. I just bought a $650 shirt, dude. A Givenchy shirt.
I don't even know what that is, bro.
Stupid. Just stupid. Okay? I go to Nordstrom like a baller, and I'm like picking things in the case. They have the shirt in the case. Didn't realize, it's all securitized, right? Mind you, guys, don't get crazy. I got my first Gucci shoes. I got them as a gift when I was 43 years old. Okay? So please don't go out there and buy Gucci.
That changed your life, though, bro. Because I see you pulling up now, bro.
It really
did,
bro.
You got the Guccis. You got.
I developed
branded out.
I developed a liking for it. So and I didn't know what I didn't know. So
in case you guys don't know, Manny is totally visual. He's a visual guy. He got the sleeve. He got the Gucci's on. Mm-hmm. More than half the time he's suited up, right?
Absolutely.
But he's the visual guy.
So so me and my buddy Brandon, shout out to my boy BV, but Brandon, he has the same shirt. He has a black one. I have a white one, okay? When you're spending $600 for a shirt, that's stupid. If you can't afford it.
I like where this is going.
You follow me?
Yep.
So there's levels to all this stuff.
Can I say something on that?
Please.
And just because and again, I'm speaking to the millennials,
Mm-hmm.
right? Typical millennial. And just because you got the money in your bank account, that doesn't mean you could afford it.
Nope.
Just because you got the money sitting there, doesn't mean you got to show it.
Yep.
Right?
Yep.
Like Manny said, there's levels to it. Respect
100%.
it. If you can't buy it 4 or 5 times over and over again,
everyone has different grasp for it.
It's crazy, bro. It blows my mind when I see people, like even ladies at events. Mm-hmm. They're walking around with a big old Louis bag, but their bank account is, what I'm saying? Respectfully.
Busted.
It's crazy.
Non-respectfully. Like, you should take your kid to private school.
Stop trying to keep up with the Jones.
7 racks for your damn purse. So everybody has different levels. I had a mentor of mine. He said, you should spend 10% of your wealth or your income every year on a car. There's another guy that goes, man, you buy the biggest, baddest, nicest car. That way you could recruit more people. There's everybody's got different things, and their slogan is whatever. Me, again, I'm kind of in the middle. But if you got a regular family like that, husband and wife, they're making $80,000 a year, they need to be budgeted, and they need to have savings goals. Right up until they're maybe 50, mid-50s, and they've got a rental, they got their primary, they got their 401k going, they got a Roth, they got all their infinite banking strategies happening, yada, yada, yada. Yeah, maybe at that point they go splurge and go to Tahiti or something like that. And they should be on a budget. But for an entrepreneur, there's different strategies behind it. Like, I just bought that new BMW.
But see, there's hacks on that.
Oh, for sure.
That's a write-off. As a business owner,
the
car's over 2 tons. People thinking, oh, Manny's just showing off. Manny's just buying the car because he got... No, Manny bought that car. Let me tell you the honest truth. Manny got that car because he don't want to pay taxes at the end of the year. Right? You're wondering, what the heck...
You had Jose in here.
What the heck is Manny talking about right now? You got to go back and watch the podcast episode a couple weeks ago that we had with Jose Estrada. But yeah, man, I love this conversation.
Did he drop my
Keep
name
going.
and tell you that I bought a new car?
I just know it, bro.
No, so there's that. There's executive housing. There's depreciation of your assets. There's so many different moving parts when it comes to building wealth. But I always talk about this because I'm like, it makes me uncomfortable. Whenever I get a certain amount of my checking account, I take out the amount over how much it goes.
I implement this, by the way. I took this from you.
Out.
I took this from you. I do the same thing.
Stresses me out.
Say that again. We got to clip that up. Go ahead.
So let's say I'm going to use an amount. So let's say I have $100,000 in my checking account. Okay. I feel bad saying $100,000, but let's say I get $100,000 in my bank account and I go to 180. I grab $80,000 and I put it into some crypto, or I grab $80,000 and I put into some real estate, or I grab $80,000 and I shuffle it amongst 3 different companies that, may be big time, may growth. My cousin Coco Vinny, I invested with him in 2017. Guy is blowing up. He's in every Walmart now. I invested in Ink Games like 3 years ago, so that's popping off. There's so many different investments, so it makes me stressed out to the point where now I'm calling some of my prospects like, hey bro, what's up, man? You got $2 million of life insurance. You need $5 million now. I think I can write that up for you. So it's stressing, and they're like shocked I'm calling them. They're like, Manny, what's up, dog? Yeah, they're like, this guy Manny's still busting it, still loving it. Where I could be, $3-5 million in my bank account and just sitting on Easy Street. So it's different. There's different levels to it.
Yeah. No, I love that, because I remember that being one of the first things that you told me. Or I think I heard you say it in a meeting or something like that, and I'm like, yeah, every time I get paid, I'm gonna cut my check in half and just put away half of it. And I just pretend it's not there. I invest it, I put it away, save it for a rainy day. But man, Manny, this is definitely a podcast episode that was very fruitful, bro. Thanks for making the time. I know you got a super busy schedule, man.
Anytime.
As we begin to close, man, anything that you want to leave to the audience? I know a bunch of TFA peeps, all of our family over at TFA is going to be listening to this probably. Anything, any words of wisdom you want to share with everybody?
We just got done with one of the most amazing podcasts I've been a part of. Pablo peeled back the onion a little bit when it comes to financial planning. If you'd like to learn more, please reach out to me on Instagram at Money Business Manny. I'd love to have a DM conversation with you, and who knows, maybe meet you at some point in time in the future. For more information, please follow my buddy Pablo or myself. We'd love the association.
Absolutely, man. And I'm going to put all of Manny's information down below. Guys, make sure you like, subscribe. You found value in this, send it to somebody. Reach out to Manny. Give Manny a follow. Reach out to me. Give me a follow, whatever the case may be. But here's the way that we grow the podcast.
I said that as a hook in the beginning.
What can we do? What can you do as a viewer to spread this? You just share it with 10 people. That's all we ask. You share it with 10 people. I guarantee you share this with somebody, they're going to come to you asking you questions. Especially if you're an agent. Share this. I'm excited to see. Tune in next week. We got a network marketing GOAT. I don't know if I'm going to name drop. I'll tell you afterwards. It's some of that you may know. But we got a network marketing GOAT coming on the show, and it's going to be a good one. So make sure you tap in, like, subscribe. We'll see you guys next week. Thanks, guys.
Hell yeah.